Hi, everyone, and welcome to our Brick by Brick webinar. My name is Cynthia Asen. I'm dealing representative with here at Parvis. I'll be your host today for today's session, and I'm excited to walk you through what we have planned. Before we get started, just a quick reminder, everything we share today is for informational purposes only. It's not investment, tax, legal, or accounting advice, and it's not an offer to buy or sell securities. If you're considering an investment, make sure to consult your financial or legal advisor to see what's right for you. At Parvis, our goal is to make private real estate investing more transparent and accessible. We connect investors with institutional quality opportunities and the teams behind them so you can see how projects are shaping communities across Canada. Today, we're highlighting North America Home Finance and their Glenlake Highview development in Langford, British Columbia. Langford is one of the fastest growing cities on Vancouver Island, and Glenlake is being designed to meet that growth with modern homes and thoughtful community planning. To share more about the project and the strategy behind it, I'm pleased to introduce to you Kyle Fabel, Director of Capital Markets at North America Home Finance. Kyle, thanks for joining us. I'm going to pass
Yeah,
this over to you now.
thanks, Cynthia. Happy to be here and excited to give everyone an overview of Glen Lake and the opportunity at hand.
Looking forward to it.
Sorry, it's just going to full screen. There we go. Okay, so our current development offering is our project in Langford, as Cynthia mentioned. So it's a really attractive opportunity right now. Langford is rapidly growing in terms of its population. There was a new university that just opened yesterday. As you can see here, it's a gorgeous area, a gorgeous part of the country to live in. So we're going to be breaking down, I'll be reviewing the city and location, the development, the current market opportunity, and the most important part, the investment itself and the expected returns. So in looking at Langford, it's located just outside Victoria, which is the capital of BC. Really attractive area in terms of geography. You're on the coastline, you have the lake, you have lots of trails, hiking, nature opportunities. It's really a gorgeous part of the country to live in. In terms of the 10-year population growth, we've seen 47% population growth on the 10-year number. In terms of the 3-year annualized growth rate and Victoria condo market values, it's a little over 13.5% at 13.6%. And as I mentioned, Victoria is the capital of BC, so a really attractive location. Population is just over 46,000, really attractive and affordable property tax. I know someone that just recently moved in Toronto, seeing the affordability that BC has to offer, especially in Langford, relative to major cities like Toronto and Vancouver right now, is a really attractive opportunity for a lot of people. You can see that reflected in the community index with a score of 91. You have over 30 doctor offices in the region, so really attractive, checks all the boxes for both students, young families, anyone that's really looking to move out to BC as well. And as you can see here, you have this gorgeous view of the lake from pretty much every floor of the building because the first 4 floors are parking. So you get great unobstructed views of the water from pretty much every level of the tower. So in terms of the return on investment, we're targeting a 55% ROI or total return for the investment. And that's targeting a completion of 36 months. As I mentioned earlier, though, we are pretty materially progressed into the timeline of the development itself. We're just pending our COI from CMHC for our construction loan. At that point, we'd be able to turn around and break ground. So we're anticipating having that COI in the next few weeks here. We're just pending our annual financials audit. At that point, we are expecting to receive the COI and then it's full steam ahead. So In terms of the project itself, we work with a partner called Ace Project Marketing, who's done a phenomenal job for us in the past on the sales and project marketing side of the business. We've worked with them on multiple developments that we've completed in Kelowna, one of which they did a great job on and sold out the building in 72 hours, actually. So they have a great track record. We haven't even begun marketing the Glenlake project from a sales standpoint, and they already have a database of over 5,000 registrants that are interested in units in the project. So the team's extremely experienced in terms of the developer. It's Navi Jagpal and Avantra Developments. They've completed over 2 million square feet of industrial and commercial projects, as well as luxury residential projects as well. Mark McCall works in development and design alongside Navi. Again, he's completed over 2,000 units of residential construction, extremely experienced, great eye for design. The feedback we've been getting for the Glenlake development on the design side of things has been phenomenal. And we know there's a lot of excitement around the project right now. So here's a bit more of an overview in terms of the map of Langford itself. You can see right here on the left-hand side where Glenlake is, the development. You can see the center of Langford. More in the middle here, you obviously have golf courses. You're right near the coastline. You have multiple lakes with hiking trails. It really does check all the boxes. So in looking at the property itself, we're already fully zoned. We're proposing 230 units for Glenlake, and that will be a mix of one bedroom and den, and two bedroom units. And the way the parcel is divided, it's divided into four parcels that are three of four of which are fully zoned. But phase one of the development, which is what we're talking about today, only requires the first two parcels, which are both fully zoned. So the parking situation is going to be four levels of above ground parking, which actually saves a lot of cost and time for the project as it reduces the amount of excavation that's going to be needed for the project. And regarding the services for the development, there actually have already been upgraded as a result of some of the nearby apartment buildings that have gone in. So that is another cost savings for the project as well. So something that we're always very conscious of in all of our developments that we work on is making sure that we're meeting the demographics and home buying preferences of the area. So obviously, with condo buildings these days, you want to make sure that they're amenity rich, that they're really meeting the needs of the tenant base. And that's something that I feel a lot of developers these days really do miss on, is they don't make their buildings feel or develop that sense of community. And that's something that we're really passionate about in all of our developments. We really want to make people feel like the entire building is their home rather than just their unit. So for example, it's going to be extremely amenity rich. So this is the rendering for the gym example, lounge. So working space, lounges, gyms. We're really checking all the boxes in terms of amenities and making sure that people feel that they have a community that they're living within. So this scene was another Avantra development in Langford that has actually paid out all of its investors already. It achieved a 30% annualized return. So great result for all the investors in the scene, and demonstrates that Avantra is capable of a successful result within Langford specifically. And obviously that experience will pay dividends in the development for Glenlake. So in looking at the target market, this is a great chart because it demonstrates the amount of demand versus the affordability essentially for family income brackets. So the lighter purple on the left-hand side is your family income brackets, or more simply, how much money or what price point can people actually afford. And in the darker blue on the right is housing listings by price range. So you can see on the far right, when you get over $1.4 million, you have a lot less demand, a lot less people can afford those luxury price points, versus the further you go to the left, you start to see more and more buyers stepping into the market in terms of affordability. So we really are trying to operate in this sort of $375,000 to $700,000 price range where there is the most demand. This is also the same price range that our recent developments in Kelowna have targeted to great success. if you're looking at sort of the luxury condo market right now, it's in much different shape than sort of your more affordable price range. So we have seen great sustained demand through this more turbulent real estate cycle. And that being said, with the interest rate announcements around the corner in September, it's looking like we may see another rate cut, but the pro forma for this project was actually done assuming much higher rates than we're at today. So even if rates do stay flat or go down slightly, it's all going to be a positive thing for this project. So, as I mentioned earlier, in terms of the capital stack and having skin in the game for the developer, you can see here in terms of the capital stack or the waterfall, more as it's more commonly referred to as, the senior construction lender gets repaid first. The return on capital goes back to the investors, and then the preferred return is paid out to the investors. So that 9.6% annualized preferred return actually gets paid out to investors before the return of capital to the developer or the LP. So that $9 million dollars that Avantra has put up actually gets paid back after the investor's preferred return. So it really does provide an additional buffer in on top of the contingency. So you have the $8.4 million contingency, the $9 million of subordinated developer equity that all serves as downside protection for our investors. And on top of that, you're getting the lion's share of the profit as well with the 70-30 split. So it really puts a lot of skin in the game for Avantra. It really aligns the interests of our investors with the developer and creates a win-win scenario for everyone involved. Project. So, and looking at the budget, this is obviously one of the most important things we're going to talk about today. We're looking at a total square footage of a little over 168,000, which equates to about 230 units in the building, which would generate a project revenue of 134.455 million, which breaks down to about $950 per square foot. And one of the most important lines on this table is going to be the contingency here. So we have a substantial contingency that's actually larger than what is required from the lenders. So we have an $8.4 million contingency on the project. With a gross profit estimation of 20.2 million. So as you can imagine, if everything goes according to plan and that contingency can remain intact, that $8.4 million can be massively accretive to your return profile. And we'll get into how we structured that return profile to make it as attractive for our investors as possible. But we've done a few things that are very unique to North America home finance that do de-risk the project and make it more attractive for our investors. So in structuring the return profile, we wanted to make sure that it's as consistent as possible. In our view, development investing traditionally has a lot of volatility associated with it on a return standpoint. So we're looking at that and we wanted to create more of a consistent return profile for investors that love development investing because you can generate amazing returns in doing so. But how can we smooth that volatility out? So what we came to was a 9.6% preferred annualized return that accrues from the moment your investment closes until the moment the project is completed and investors are paid out. So what that does is it now aligns interests with our investors and the developer, because if we're extending duration, pushing out the timeline, you'll continue to accrue that 9.6% annualized return. And what we've actually done is the developer Avantra has subordinated $9 million of their own equity. So their capital, the way the capital stack is structured, is first at risk. It's ranked behind the preferred return of investors. So that preferred return is not only protected by the collateral mortgage charge that is featured in the deal, but it also is protected by that $9 million of subordinated equity. So even in a worst case scenario, should the project break even, you actually would still receive or a portion of your preferred return from that $9 million of preferred equity from Avantra. So it really aligns the interests of the developer and the investors. It's a great amount of skin in the game. We're only raising $9.2 million in equity. So the developer's in for about 50% of this deal, which is very rare these days and really shows the confidence and the amount of confidence in the project. So As I just mentioned, the LP of Entra is in for $9 million of subordinated equity. We have a collateral mortgage charge that's held in the name of a trustee for the equity funding side of it, the investment we're talking about today, which was a $9.2 million total raise. We currently have about $700,000 left of the profit sharing class, which is the 9.6% preferred return. And then you do also get a 70% profit share, which serves as your upside for the project. So the preferred return really helps to establish a baseline or a floor for you on the return side of things. And then the profit share is meant to serve as your upside in this scenario. So you can see here, you have the 70% profit share that goes to the investors, and the remaining 30% that would go to Avantra in this case. So they're getting a lower portion of the profit share and subordinating their equity relative to the investors' preferred returns. So it really creates an attractive opportunity for our investors. So as I mentioned, in terms of the return profile, we're targeting 55% over the 36 months. So you can see here, your 9.6% times 3 years would, plus your profit share would equate to $55,000 if you were to invest $100,000 into the development. So just to quickly summarize, we have a really strong offering. The market in Langford has remained resilient. The team with Avantra has a lot of success operating in Langford specifically and other developments across Canada. And the location of Glenlake is really prime for a development opportunity like this with the new university opening yesterday, in addition to just strong housing demand that we've seen in Langford for years now.
Thanks a lot, Kyle. I was expecting some more, but thank you for everyone for watching today's session. If you'd like to learn more about Glenlake, Highview, or investing with through Parvis, please visit parvisinvest.com or connect with our team directly. We look forward to having you join us for our next Brick by Brick webinar.
Thank you, Cynthia.
Have a great day.